morning, everyone. It's great to be here. I have the unenviable task, I guess, of going before lunch, which means we have empty stomachs and full bladders, which makes it hard to sustain good conversation. But I'm going to speak today a little bit about the role of culture in ETA and in search funds in particular. I'll sort of maybe throw out that caveat as I jump into it that we do mostly traditional funded search investing, so some of the comments I'll make are a little more slanted to that, but I think some of the first principles apply more broadly to ETA in any context. So before we jump in, I actually wanted to just get a better sense of actually who's in the room, first by role and then by sort of tenure in the search fund community. So can we start with searchers? Hands up. Okay, and is that who is not yet searching but thinking about being searching? Okay, and currently searching? Okay, and then down the track and operating, it's like the two panelists, basically. Okay, good. Investors on the equity side? Okay, lenders, so investors on the debt side? Okay, and advisors? Okay. Great. Now I want to flip it, or I guess shift the axis and ask about tenure. So I want to do this first one. Can everyone stand up just to get a little bit of pre-lunch energy? Okay. All right. Who's been at it for, or thinking about, so we can round up actually. So this isn't even from the time of doing it. It's from like thinking about it, learning about it, being interested in it. So that can be your start date. Who's been at it for less than a year? Okay, sit. Okay, who's been at it between 1 and 2 years? Well, that's an unusually small representation, okay. Cool, you guys sit, the two of you. Okay, 3 to 5 years interested in it? Okay. Yeah, and at it 5 years plus? Okay, and longer than 5 years? Yeah, okay. Cool, great, thanks. So what you can see is a pretty obvious shape to the group, right? Which is a lot of newer participants in the community than older. And that's very common in a new market like today. But it's also the reason for this topic. And I think when we did the forum in Sydney last year, I chatted to Pete about bringing some of the observations and like pattern recognition and elements of the model from overseas that have really helped drive high performance and use this as an opportunity early on in these communities' life cycles to sort of plant some of those seeds. And as has come up routinely today is there's like some pretty special elements of the ETA or search fund culture that, and not just the use of analogies, but you know, other key drivers of performance that are quite special. And so today I want to talk to you about what those things are. To frame the conversation, so actually, another caveat, and to build on Cam's earlier comment on analogies, which is super helpful. I function basically only in analogies. Maybe that means I'm a good fit for the search community, I don't know. But my wife and my business partners accuse me of being overly simple-minded and that I can only deal with 3 types of analogies, which are business, sports, and romance. So romance has a too high likelihood of getting inappropriate in this kind of setting, so I'm going to leave that out. And of course, we're talking about business or investing, so that eliminates that. So I'm left only with sports, so you're going to have to bear with me. And on that note, I guess to tee up the conversation about culture, I want to ask, my hope is to make this a little more interactive and dynamic and not sort of just speak at you, but rather discuss with you. What is culture? And why does it matter? It's a pretty nebulous thing. I chose this picture on purpose. I thought I'd play to my audience a little bit. What's culture?
The norms of a society.
Sure. Yeah, or a group, like, yeah, society, company, norms, okay? Pete?
I reckon it's tested in how you respond in really turbulent situations.
Okay, so it's tested under pressure.
Beliefs and values.
Beliefs and values, so norms, beliefs, values.
Ways of doing things, or like rituals.
ways of doing things, rituals, so like more broadly behavior, right? Like how you act in certain situations, norms, beliefs, values. Anything else? I agree with all this, by the way. Identity. Yeah. And does this group have a strong culture? Yeah, okay. Great. So I'm going to, culture is a very powerful thing that can influence behavior and beliefs in non-obvious ways. And so I'm going to give 2 examples of like elite professional sport or like international sport. Next, where culture is very, very different, but you might look at it as like, these are pro athletes just doing their thing, right? So this is Neymar, a Brazilian soccer star. This is in the 2018 World Cup. This is sort of par for the course, right? In professional football, as most of the world calls it, soccer as we call it in North America, this is part of the soccer culture. Like some people from outside of the culture community would maybe call it whinging or flopping or being soft or whatever. But when you're playing at an elite level like this, it's actually part drawing a penalty can lead to a goal, can lead to a win. And in defense of him, as a star player, he's often disproportionately physically attacked or played against in a very physical manner. So sometimes for him, more than other players, this can actually be pretty genuine and legitimate. But unquestionably, there's an unwritten set of norms, beliefs, values that make this kind of behavior not only sort of accepted, but like rewarded, and it's a source of competitive advantage, right? Cool. This isn't normative. I'm just observing what soccer is. I'm not casting a value judgment on this at all. This is pro cycling. So this is an American rider named Lawson Craddock. It's the 2018 Tour de France, if anyone knows the Tour de France. It's a 21-day stage race through France in which one day, the riders do a ride that would pretty much bury most normal people. And they just do that for 21 days over a 23-day period, riding anywhere between sort of 180 to 220 kilometers a day and often climbing 3,000, 4,000, 5,000 meters of ascending in one day. It's a grueling thing, to say the least. This is the 2018 Tour. Midway through stage 1, Lawson Craddock's in a bit of a touch of wheels and a crash, and he goes over, breaks his scapula, his collarbone, and separates his shoulder, dusts up his face a little bit. Not only does he finish the stage, he then gets the idea that he's just going to ride the rest of the Tour de France in that state. And it became a goal of his to finish, and he finished, not even in last place. So again, that set of behaviors, norms, expectations, and like what pushes a guy like that to do that in that context, right, is totally culture driven, right? It's like cycling, you pretend you're fine when you're completely broken, right? And that's part of that game and part of that culture. So why culture? Why do we want to talk about it? It's because it can shape behavior in these powerful but non-obvious ways. And search funds are no different, okay? Studies from abroad and from more mature search fund markets indicate consistently that culture has played a critical role in sustaining high performance, right? A lot of people get interested in search because they read some of the studies and they see 30% plus IRRs sustained over 40 years. That's unusual. And a bedrock of that unusual performance is an unusual culture. But the thing about culture is it's hard to see and explain, right? So it tends to work best when it's made explicit. And in the absence of being intentional and explicit about it, people default to their training and assumptions, right? So as new entrants come into the search fund community, they can come from a venture world or a private equity background or an investment banking or an ops background. And if it's not explained, you can only sort of feel it a little bit and maybe observe it opaquely, but you might not know exactly what it is. The other thing is it's tough to export. So a lot of these cultural norms and patterns of behavior, like when you hurt, do you flop, or when you're hurt, do you pretend you're fine and carry on? those sort of soccer and cycling analogies, right? What do you do in search, right? And as a new entrant, especially on the operating side as a searcher, like it's a fair question to ask, how should I behave, right? So as the model spreads around the world, I'm interested, as my firm invests in search around the world, particularly in new countries, and so we have a vested interest in making sure that some of that culture exports. The last thing is that it's best established early on because the clay is still soft, right? Or the iron is still hot. So it's much easier early on to establish some of those cultural norms so that they're well understood and that others can perpetuate them accurately. So that's why I want to talk about culture today. I then want to go, this is the, spoiler alert, this is the one non-sport picture in the whole presentation. But I'm gonna get it back to sport in a minute. What is search fund culture? And before we get there, does anyone know who that is? Jake, you're not allowed to answer, but you've been around too long. Luke?
Yeah, it's
Irv Grousbeck, right? Who's seen as the originator or sort of the godfather of the whole asset class and investment model. Originally a very, very successful entrepreneur, then a very, very accomplished lecturer, first at Harvard Business School where he first taught the ETA concept. He then took a job at Stanford and continued to teach it there. And the first searchers in the world were his students from Harvard and Stanford. This was back in the early 1980s to begin with. I told you I'd tie it back to sports. Anyone else know why he's been in the news lately?
Boston Celtics.
Yeah, he just sold the Boston Celtics for $6.1 billion. So he was the control owner of the Boston Celtics, which is, if you do search investing pretty well for quite a while, you end up in your other pursuits just buying the Boston Celtics. But I told you I'd get back to sports. Okay, so search culture. I'm actually most interested in hearing from maybe some of the youngest tenured people in the room, sort of initial impressions. It's actually really cool to see some of these comments have come out in the other talks this morning, sort of unique features maybe of the search culture. But if you see Irv and you hear search funds, no ideas? We might have to draw on some of the old guard here. Okay.
It's more cycling than soccer.
Yeah, I appreciate you running with the analogy. Maybe it is a little bit. I think we'll talk a little bit more about what it is. Anything else? Nothing? Okay, well that makes, I guess, the
In my experience, highly supportive.
supportive?
Researchers around the world run very open, very transparent, very supportive.
Yep. Open, transparent, supportive. Anything else? Okay. Well, I'm actually kind of pleased that no one has a strong view or wants to share, because that makes the next few slides in 10 minutes maybe more relevant than it would otherwise. So if you just told me what the answer was, this wouldn't be great. So my objective with chatting to you today is really simple. It's just for anyone who knew and maybe doesn't know, is explain it a little bit, clarify it for some others, and ultimately plant that cultural seed here in particularly the Kiwi search environment, but also given the Aussies in the room, also just for the broader ANZ region. Plant that seed and then help it grow in the right direction. So my focus today is really going to be on two things. It's going to be the structural characteristics of the search fund investment model and how that breeds a unique situation that calls for a unique culture. And so I'm going to walk you through those structural foundations that are a little bit different in search compared to other environments. And then I want to dwell on really unpack the sort of key pillars of the search fund culture. So the conversation is going to focus primarily on the board and the CEO to understand why that's the focal point of the discussion. I'll use my next sports analogy, which, being an adopted South African and my wife is South African, she insisted I slip this slide in here to really drive home to New Zealanders just how important a good coach or a good board and a great CEO is in high performance. For those of you who don't know, that's the South African rugby coach and the captain of the South African national team, Siya Kolisi, and Rassie Erasmus. And they obviously put back-to-back world champs and have done something very unique in the culture of how that team plays. And so that's the lens through which I'm going to focus on culture in search. So why are search fund boards different? This is a bit of a heavy slide. I don't want to read it at you. What this slide does is, this is actually from a white paper, where it breaks down, it compares a search fund to other common investment types and board structures that a lot more people would be familiar with. So we look first at a search-acquired company and how that works, and then we look at a venture capital-backed firm, a private equity-backed firm, at the big end of the market, a publicly owned firm, and then also, as a point of reference, nonprofit boards, which are also a context in which a lot more people have experience of how those worlds work. So we think about this stuff across a number of dimensions, and all of them make a search fund structure a little bit different than those other comparative points you might have in your mind, right? So a lot of people say you come to search from private equity. Your default, in the absence of a clear explanation, is it's like mini PE. Let's rock and roll, right? But there are important structural differences that's what I want to highlight next. So the first is the CEO experience, right? And so often a searcher is a first-time operator and young, right? It's kind of obvious, but it's fundamental, right? So in a VC-backed environment, sometimes founders and CEOs are first-time founders and they're young, but not always, right? In private equity, that's often not the case. Usually you have a battle-hardened, experienced CEO, often even no longer a founder, but a professional management layer who's often been private equity backed before, right? So there's a lot of experience there. Publicly traded company, of course, as you flex up, that's a for sure professional manager that's been at it for a long time, right? So that level of CEO experience matters a lot. The next is the investor type, like who invests in search funds, who invests in private equity and venture. So historically in search, it's been a collection of high net worth individuals and entrepreneurs and operators and sort of much smaller, more private, more nimble, more entrepreneurial investors, right? VC is a mix. Very early stage, you have some investors like that, but then as you get into the funded space, you have large VC funds themselves with institutional investors who put different pressures on a CEO and their team. Private equity is also the same. The bigger the fund, the more mature the private equity firm. Usually the bigger their LPs, the more institutional and professionalized they are, the less personal and less relational they are. That's obviously, once you get to the public markets, that's, it's like quant hedge funds can sell your stock if they don't like what you're doing. So it's a much different investor landscape. Another thing is investor control. So who's in charge? Right? And a traditional funded search is usually a collection of collaborative minorities where no single investor is bigger than 20%. So a common number in a search around the world is maybe like 8 to 15 investors. So do the math. That's on, people are from sort of 5 to 15%. And interestingly, the carry package of the searcher, right? If they do well, a solo searcher can do 25% of the equity, and a paired search can do 30. So that searcher ends up, those searchers or that searcher ends up, if they do well, they're the largest shareholder. And they're the boss. They're in control, right? Venture and private equity are often not the case. It's usually a winner-take-all lead investment environment where someone's taking the whole deal. And if they don't take the whole deal, they lead it, and they usually club in affiliates. So if there's any co-investors, it's usually a consortium or a clique that's going to act together. Private equity, very similar. It's usually a lead investor, and that's it. It's winner-take-all. And then public companies obviously are diffuse, and there's hedge funds, and there's pension funds, and there's individual retail investors, et cetera. So that investor group and who's in control influences the sort of culture and the behavior and the structure inside the model. The next is investor priorities. So what is an investor trying to achieve when they do invest, right? And what is the operator or the CEO trying to do with that investor? Right? The priorities inside search are perhaps not obvious. It's one, to create a ton of value, but also people get into it often to like lead something and build something, right? Operate, roll up their sleeves, get their hands dirty, develop people, contribute to their community. It's a different ballgame there, right? If you move over one lane to VC, the priority is usually hypergrowth. In private equity, it's often vilified as just returns only. And whatever else doesn't matter, right? Publicly traded companies, it's usually quarterly earnings, right? That's what people care about day in, day out. So we also have hold periods, which I skipped over, right? A typical search fund hold period is anywhere from 5 to 10 years. Venture can be that long, but there's usually like a backslapping, pre-seed, seed, A, B, C that runs on more of like an 18-month or 2-year cycle. Private equity is your classic, like 4 to 7 years. Public is, it can be quant funds holding stocks for seconds, and it can be long-term value buyers that hold the stock for 25 years. So that's just very, very diverse, and it's hard to pin down. The CEO priorities in the business, like what are you trying to do day one? There's a great panel on that earlier. What are you trying to do in year 1, in year 3, in year 7? And those are very different. The CEO's priorities for the business are super different, right? Like we heard today from the panel of like taking over the business. Your priority is to like learn and not mess it up, right? So imagine a world where you take private equity backing and you want to talk to your board and it's like, hey, I just need 12 months to like figure out what's going on here because I've never done this before, right? And the partner from the private equity fund in Sydney is like, So again, this is about, it's not normative. I'm not saying what model is better. There's lots of ways to make money, lots of ways to create value. But it's about being aware and then intentional about exactly what a search fund is and how it works. Maybe one last comment is just sort of governance standards. So like what are the rules of play in terms of like what you report, what you say, how you engage with your shareholders and your board? Search is usually a relatively small, under-professionalized firm, right? With limited reporting capability. And so the investor group like wants that quarterly report and wants some indication of what's going on, but there's a recognition of like a journey of putting in financial controls and information systems that allows for more mature reporting over time, right? So like very common in a search fund investment, you get in, you realize there's a dysfunctional finance function not able to report on, I think Luke, you mentioned closing the month 120 days later as an example, right? Again, imagine that private equity partner being like, wait, we don't know sales until like 120 days after the month close, right? Or imagine a public company CEO on a quarterly earnings call being like, we're working on it, Just hang tight, we'll tell you on the next quarterly call how we did this quarter, right? It's just unimaginable. And so that sort of like degree of information sharing, the quality and speed of that information sharing, and the sort of sophistication with which you play that investor relations and governance game matters a lot too. So those dimensions aren't all of them that matter. They're significant ones that rear their head all the time. A lot of them in isolation are pretty obvious, right? But I think what's important here is as you stack it all together, you realize that the search beast or sort of the search fund cocktail is like quite a unique combination of talent, maturity, incentives, and structures such that it really is quite a unique thing compared to any of the other asset classes or investment models that people from the outside, to take a step back, we often learn as humans by association, right? Like it's the Uber of that, or it's, the iPhone of this, And those heuristics can help with quick understanding, but they're often applied to the search world in a way that leaves some important puzzles out of this piece, and you end up drawing an inaccurate or misrepresentative conclusion of what search actually is, right? So over the years we've raised a couple funds from LPs who want access to the search fund investment class, and you get it depends who it is, who you're pitching to, but you get all the time, it's like, oh yeah, it's like mini SPACs. Got it. I'm not into SPACs, right? And then you point out like an obvious detail that's like, well, when you invest in a search, you have a right but not an obligation to invest in the asset. So you get to observe the searcher, judge their work by the quality of the asset that's found, and then make an independent decision of whether or not you want to dollar weight up and cut a much bigger check. And that's like significant shift in risk from a SPAC. Does anyone know a special purpose acquisition company? They were all the rage some years ago, which are blind pool acquisition structures that are publicly listed. But that blind pool is very significant, right? Investors read a prospectus that says we're going to go buy some healthcare assets. They sign up to a capital amount, and when that management team calls to go buy a healthcare asset, you send your money, because that was the terms of the offering, right? So a lot of people wrongly assume, by trying to draw those heuristics of like, oh, search is like this of that, or this of that. Oh, it's like a mini one-person SPAC. Okay, cool. But it's not, because investors have that right but not that obligation to participate, right? So that's a meaningful difference, and it influences behavior. So wanted to make those things clear and unearth them for conversation. Any questions at this point? Is that some of the uniqueness sticking at this point? Okay. So question is, what values have evolved from these structural differences, right? And what I'm going to cite here directly is a sort of groundbreaking study that was done probably about 2 years ago and delivered at the Stanford Search Fund Conference last September. Or is it 2 September? Yeah, time has a way of running, but two Septembers ago, developed by a group called TTCER, and I'll tell you about them in a minute, and Ashford Ventures, I'll tell you about them separately. So TTCER is a collection of 5 principals who were the sort of founding group of investors and operators that built a company, search fund acquired company called Asurion, which up to this point has been the largest search outcome by a large margin ever. They built a business, it was a roadside assist, sort of towing and truck repair business in Texas that they bought, and they turned it into the world's largest insurer of mobile devices. There's a long story of evolution there. I mean, the quick version of the story is that they were helping respond to these call-outs with truckers, but this was the early 90s when cell phones, they were like Nokia, sort of like brick phone, actually a lot like this. And they would call and be like, hey, I have a flat, I'm on the side of whatever highway, can you come sort me out? And they did that for a while, and then they realized we wouldn't know anything was wrong unless he calls us. So maybe it's more important to make sure he can call us than having the skill to like fix the tire. And they started making sure that phones were working and staying online for truckers originally, and then it grew into, now unbeknownst to most people who buy a cell phone in the world, the white labeled technology and insurance product behind the handheld device that you buy is Asurion powered. So they're like $11 or $12 billion of ARR now in 65 countries. So anyway, the guys behind TTCR, incredible operators, maybe not the most creative naming of an entity because that's just the first letter of the 5 of their last names. So it's pretty straightforward, but they're a prolific search fund investor. They've probably done, Jake, if I'm speaking out of turn, probably like 300 or 400 searches and probably 200 acquisitions, maybe. And of course, we're one of the pioneer search operators themselves. So they're fascinated by this culture thing because they stumbled into it and sort of helped build it over these last decades, and they wanted to understand it better. And Ashford actually is very similar. It was the first searcher outside of the US. They searched in Puerto Rico. And the two founders in those businesses were classmates at the GSB at Stanford in the early 1990s. And so they've been fast friends for a long time. Both incredibly successful searchers. The Ashford guys first went to Puerto Rico and built or bought an outdoor advertising firm and built that to some considerable scale, and then were taken out by a mainland American outdoor media company. That was their first effort. They then reloaded and decided, just for an extra challenge, they wanted to move to Brazil and try to do it there after. And they now own one of the largest cell phone tower companies in Latin America that they built from their second kick at the can. So very capable operators and search fund entrepreneurs. Anyway, in 21, 22, they did a study of core values in search. And I'm going to just pull this straight from the report. These are sort of the cultural tenets or pillars of high-performing search fund entrepreneurs. So there's 6 concepts here that I don't necessarily need to read at you, but they speak a little bit first. I mean, Pran, you threw out the idea of like openness and transparency. It's a clear theme here. But one of them is this concept of digging wells. So paying things forward as a style of leadership, of developing opportunities for others, playing a multi-round game, trying to grow the pie rather than capture or trade it. The other that make up words, figure-it-outness, is not actually, I don't think, a real word, but it's this idea of like being hungry, clever, resourceful, gritty, and just as operators and investors, things happen, we buckle down and figure it out, right? So like a searcher, when faced with a problem that may even be terminal, a searcher, whether they know it or not, who's sort of like on the culture. It's a little bit, there's a great quote from Buzz Aldrin, one of the first guys on the moon, an American astronaut. And he was asked before he was going by a reporter, just before they launched on the Apollo mission, Buzz, what would you do if you were on the moon and there was a problem with the lunar lander and you had 2 hours to live? What would you do? And he answered candidly, immediately, without thinking about it. He just said, I'd spend 2 hours fixing the lander. Figure it outness. Another thing is searcher first. So what we care about, the idea is fundamental to the search in the ETA model, at least as it's traditionally been spawned out of Stanford and Harvard, is this idea of a first-time operator who's usually young, usually unproven, and it's a big bet on talent. Unproven talent. It's a high trust environment with a default, the reciprocal of that extended trust is a high degree of accountability and integrity. One is Fosbury standards. The footnote didn't fit on the slide. Does anyone know what Fosbury is? Who Fosbury was? Yeah, high jumper. So it's, again, I had to get it back to sports. You can see it's a common theme, sports analogies. It's even in the core values report. People used to high jump like this back in the day, and Fosbury was the first one to do it like that. Changed how high jump is done, and moved the ability of people to high jump, like doubled the ability to do it. And so what that is a pursuit of excellence and high standards. So there's this contradiction in search often that it's multi-round game, play with respect, play with humility, be kind, considerate, pay it forward. Often that idea of like a nice guy with round elbows won't also shoot the lights out. And that's not true in search. The idea is that you can achieve incredibly high returns, like the highest returns in private capital markets over the last 40 years that many people don't know about, but you can win the right way. That next point is what I just talked about, round elbows. That's the idea that sharp elbows is how a lot of other people do business, particularly from other asset classes that are better established in those winner-take-all models. And this idea is that we work together, it's highly collaborative. We interact with folks with humility, with a beginner's mindset, with trying to be helpful. And the last is driving results. So we value outcomes and big returns as investors, but we often find that searchers and investors value things outside of just financial returns, like building an enterprise, building their own version of this culture, empowering people, contributing to their community, et cetera. The other thing is that we value the relationships that we build. You end up doing this with entrepreneurs and co-investors over the course of years, and you just have a lot of fun doing it. So there is a fair question, which is why does all this matter? And I just wanted to sort of share some data from the study. And the headline is that people who most strongly represent these cultural tenets, so boiled down into a few keywords in the study here, you have some ideas of collaboration, mentorship, innovation, results orientation, grit or resilience, helping others succeed, and valuing long-term relationships. So the companies and CEOs who exhibited those behaviors and also inculcated them into their own organization dramatically outperformed not only other asset classes, but their peers in the search fund community as well. So this was polling sort of top 25 CEOs, and as judged by the quantum of the return, and these are their responses to the same cultural survey. So you can see that anywhere between 15 up to 30% overweight in these cultural categories than the median CEO. So it matters for a variety of other reasons, but one of the key things that came out of the study is it can really drive performance. Cool, so I want to get to search culture now, and I'm going to leave you with an idea from a different sport. So it is, I think, someone commented earlier that it's a little more like cycling. It probably is, but I want to share one example that I think captures a little bit of how people play search, just so that you have a working example. Does anyone know who this is? Okay, there's a golf fan in the room. Who said that? Yeah, he's ranked, what, like 20, in the 20s worldwide on the PGA Tour, maybe? Recently notched his first win, I think, actually, just a few weeks ago, which is great to see.
And he'll be joining us on Friday if anyone wants to.
Yeah, he's taking the last tee time, or the last slot. Anyway, does anyone know what happened to him last year in the Tour Championship? A couple nods. Oh, I think it recently was. This is separate from that, but yeah, it was. Was it featured in the net? I haven't watched it yet. Okay, he is in full swing. I think he's one of the featured golfers. But does anyone know what happened to him in the Tour Championship last year? No. So there's an obscure rule in golf, which is if you draw your club back and hit an obstacle, be it sand or stick or blade of grass or whatever, you suffer a two-stroke penalty. I actually don't necessarily know like the etymology of that rule and like why that matters, but there's some probably golfers in the room who know why. But the truth is, a lot of it's sometimes hard to see, and the rules officials walking with the PGA players as they play don't see everything. So he was in a bunker on an approach shot. He was on the front page of the leaderboard, probably within a couple strokes of winning on the weekend, and in a tournament that's multi-million-dollar purse. And he was in a fairway bunker and drew the club back, hit it, was walking along, thought about it, and then called over the rules official and was like, I think I brushed the sand on the backstroke. They got out the film, the high def, slow-mo, everything. Inconclusive in real time, like the video review or whatever. Inconclusive, and he says, you know what? Pretty sure I did it. Let's do the two-stroke penalty. Cost himself a couple $1 million. He finished, fifth instead of second or something like that. And that's the culture in golf, right? It's like high integrity, high performance, high honesty, and I think also a mindfulness of playing a multi-round game where the trust he wins from behaving like that and playing like that can play itself out over many more relationships and tournaments over time. So golf isn't perfect, it's an individual sport. Search is a little bit more team, but just that sort of self-reporting integrity, but also toughness and high performance, winning on the PGA Tour and competing at the top of the PGA Tour is sort of a great mix of that confidence, capability, but also humility and integrity that I think is the hallmark of search culture. All right, so some quick concluding thoughts. So I hope now you see that there's, this unique structure spawns a very, very unique culture. It's a very, very special tribe around the world that has little pockets of it like this. And I think I just wanted to sort of finish with a short test, which is the people who were greater than 5 years in the room, just stand up again. Okay. Who is here today because you reached out to one of those people standing to learn about search and were received with open-mindedness, collaboration, sort of curiosity, humility, all those things we've just talked about. So who's come because of that? You can stand. Cool. Now, who left sitting did the same thing to anyone standing? Okay. And who's taken a different pathway in here to learn about it. There might be just like random people on LinkedIn who've never talked to anyone and just found out about this, which is great. It's an alternative origination channel, I guess you could say. But who's left sitting that has reached out to someone else, maybe not here, but someone else in the search community and has been received with that same kind of reciprocity? Okay. So that's the tribe. That's how special it is. And I don't think there's too many industries or sub-industries or asset classes, whatever you want to wrap this thing up as, that would have the same degree of a hit rate on something so collaborative and helpful as getting other people into the community and paying it forward. So the whole point of today's chat was to be aware of it. Please do your best to try to understand it and its nuances, harness and perpetuate it. And the earlier we start, the better it is for the whole community here. So thank you. We can do Q&A, but I'm mindful of lunch.
That's what I was going to do. Are there any? I'll take two questions. Are there any questions that anyone has for Rob? Oh, here we go, Chris up the back.
So Rob, you characterise as being important kind of a 30-year-old surgeon. All of the studies about boards and directors and other things talk about diversity, and so grey-haired surgeons or any comments on kind of the variety of surgeons who can.
Yeah, so the search community probably is like, unfortunately, 30-year-old white and male. And that's much more of a function of selection bias from how people have learned about search over the years, rather than any indication of like who could be good at it. So search historically has only been taught at some of the world's top business schools, and those are disproportionately, for better or for worse, young, male, and white. And so a lot of the people who have been in the class, who have learned about it, who have then gone on to do it, look like that. And then a lot of their investors are folks that did that 20 or 30 years before, when it was even more male and white. And so that's still a very real situation in the community. And actually, you can see it here today, right? Like I see 4 women, right? And we're what, 60, 80 folks here? 60? Yeah, so historically still there's like 8 or 9% of searchers all time have been women, right? Which is totally misrepresentative. And I think that's part of modernizing and sort of spreading the word is creating opportunities for other people to do it.
So would you expect diversity to give a better outcome than some of the results that research was giving one? Because it does outperform, as you said, VC, PE.
Yeah. I think diversity and not just sort of demographic, but ways of thinking and backgrounds and careers and all those things as well, will continue to drive higher outcomes, but also a lot more lower outcomes. So I expect it will widen the range, but not decrease the mean.
One of the things we lament in ANZ is 0 universities, and we were just talking about this earlier. 0 universities talk about entrepreneurship through acquisition or search, regardless of how many times we've tried to beat down their door and say it's a thing. We've even got a PhD in search standing up the back from Otago University, and yet they still don't have a course in it. But on the flip side, one of the things about our cohort that's coming through is that I think, to your point, Chris, the cohort that's coming through in terms of ETA and search in ANZ is actually more diverse in terms of like almost every factor, like background, gender, age, is actually more diverse, and that's probably a function of the fact that it's not being fed so aggressively by the universities. So there's pros and cons to that, right?
Yeah. There's also regional nuances, right? Like some of the first searchers in East Asia are all women.
Yeah.
South Korea, or sorry,
China.
Taiwan, China,
Japan
as well. Yeah. So that's unexpected. It's cool.
One more. Because you missed out on the last one, you know this one.
I think the cultural component as a market scales, how have you seen that evolve? Because my own experience is it's very personal. You meet investors at their home, they give you time. It's very one-on-one versus obviously as a market scales, gets more professional. Got funds, bigger funds that look at hundreds of searches. It obviously then needs to change into a system where I think a lot of these cultural components, they work because it how have you seen that in the bigger markets and how do we compare?
Yeah, so I would say it's very much under pressure. It was the reason for the digging wells study, to better understand it and also explain it so that people at least have the shot of understanding it and opting into perpetuating it versus not knowing any better and carrying on with their own default assumptions and norms. I think there's no question as newer investors, providers of capital and operators come in, it's going to get diverse and diluted in both good and bad ways. But it's also part of the reason, but I'm here and why Pete wanted this to be a topic is that culture is one of those things that works best when it's most intentional, and so that was the idea here, is to try to spell it out and create that opt-in opportunity.
And if you speak to people in Australia, for example, some of the people I've spoken to there on both the PE and also the VC front from sort of 20, 30 years ago, they talk about this kind of culture existing in Australian private equity and Australian venture capital, which now has kind of disappeared as things have kind of industrialised. So it's a similar, like the trajectory is completely right, but there are things that we can do to try and make sure that we're keeping the culture there.
Yeah.
Thank you.
Yeah, pleasure.
Just before you go, because you didn't do this at the beginning and I thought you might have, just a couple of quick stats. So Ambit Partners is on Fund 2. How many individual searches have you backed?
Almost 100.
Yeah, and then how many follow-on acquisitions?
We've done 24 now out of the first fund, and we're working on our first
how many countries?
37.
Yeah, right. Okay, cool. So I just wanted to give some perspective on the fact that we're drawing in from like quite a wide global perspective to bring some of that to this community, and we really appreciate Rob having you. So thank you very much.
Pleasure.
Quick round of applause.
Thanks, Pete.